Hello people, my name is Andre and today we're gonna be talking about the top 5 reasons why you should be investing in dividend paying stocks. So you wanna make passive income and you don't know how to start. Why not start allocating a small percentage of every paycheck in buying shares of companies that pay out dividends? These shares can be usually bought on the stock market by opening a brokerage account on different websites or platforms, for example Fidelity, Moomoo, eToro, and so on. Personally, I use all 3 of them for different tasks and analysis. Depending on the experience level that you have as an investor and the market that you want to target, you can choose any of those 3. If you guys are interested in opening a brokerage account and starting the investment journey, feel free to use any of the links that I put in the description. Also, I'll be adding the bonuses that you'll be receiving if you sign up through those links. The first reason why you should be investing in these types of stocks is because dividend paying stocks can provide us, the investors, with a steady stream of income. You might have heard about the term dividend. Essentially, if you own shares of a particular company that pays out dividends, you will be entitled to get a portion of that respective company's profit in a form of a cash payment. Dividends are usually paid on a regular schedule, monthly, quarterly, or sometimes companies that have a surplus of cash lying around can decide to give us, the shareholders, a special and extra dividend besides the regular quarterly dividend, even though they're not obligated to do so. Like we mentioned before earlier in the video, when a company makes a profit and you own shares of that particular company, you are entitled to a portion of that company's profits, the dividend. The thing about dividends is that they can provide a cushion against market downturns. Even if the stock price goes down in price, the dividends keep flowing in. That can be a reliable source of income for us, the investors, especially for those people that are retired and living off their investments. This can make it easier for us, the investors, to manage our cash flow and budget accordingly. By starting to invest in a portfolio of dividend paying stocks, you as the investor can create a diversified income stream that can provide stability to your overall investment portfolio. The second reason why you should invest in these stocks is because they have a higher potential of long-term growth. One of the main indicators that can tell you a lot about a company's value is that they can afford to pay out a dividend. In this category, we find different types of stocks that pay out dividends. Let's take Apple for example. As of right now, Apple is considered to be a growth stock, meaning that the company has extreme growth potential. Another type of stock would be value stocks, and in this category I would add Realty Income for example, for its earnings growth, dividend payout, and diversified portfolio. Now let's get some stats on Realty Income. Realty Income is a real estate investment trust that owns over 12,000 real estate properties that give out cash flow. They have paid 634 times the dividends every month, and they also increased the dividends 120 times since their inception in 1994. It's really important to mention that over time the company grows and prospers. That means the stock will grow in price, and also that means more capital gains for the respective investor. One of the main reasons that I personally like dividend paying stocks is that they create passive income. No effort, just buy and hold, and you get the cash flow, baby. Also, if you want to check out more details on a specific company, you can use Seeking Alpha. You can find tons of articles, company evaluations, and other useful information that can give you a helping hand on deciding what company is best for you. By reading articles, checking valuations, and balance sheets, I gain a clearer understanding on how stocks work in general. So if you guys want to check out Seeking Alpha, you will find the link in the description below. And now enough said, let's get back to the main topic. This investment strategy based on buying these types of assets, these dividend stocks, it's so easy to maintain and it doesn't take a lot of effort. The key word here is consistency. Keep investing. Imagine every dollar that you invest is working for you. The more money you invest, the higher the payout. It makes sense, correct? Another essential thing that will greatly increase the value of your investment portfolio is to always reinvest the dividends in buying more shares of that company, and ultimately that will increase your ownership stake in that specific company. Now let's go back to Realty Income for a moment, my favorite monthly paying REIT. So according to Seeking Alpha, Realty Income for example has a yield of 5.05%, meaning that every $100 that you invest, you'll be receiving $5.05 every year, truly passive. I don't know about you guys, but the idea of receiving money while I sleep sounds like a pretty good idea if you ask me. I know I'm gonna get a lot of hate for this, but we have to talk about it. Let's say you're gonna be making your own coffee every morning and you're not gonna be buying Starbucks coffee. Let's say only one Starbucks coffee. Let's cut out one Starbucks coffee every day for one whole month. How much money can you save at the end of the month? It turns out that you're gonna be saving from $60 to $150 every month just by cutting one Starbucks coffee every day. Personally, if you ask me, I'll use that money to fill up my gas tank a couple of times, or why not buy more stocks and give it more dividends. So all of that just from saving the money you spend on buying coffee every day. Even though it doesn't sound like a lot of money right now, for sure it will compound as long as reinvest the money back in the stock. If you decide to invest that money in a company like Realty Income that offers currently a 5% yield, meaning that every $100 that you invest, you'll be receiving $5. You will have at the end of the year from 12 shares to 30 shares more of Realty Income. Those shares will be paying you at the end of the year from $36 to $90 truly passive. Remember, you're not doing anything, you're just buying and holding those stocks. Quick disclaimer, nothing against the brand, I also like Starbucks coffee. But I just wanted to illustrate using this simple example how can a small decision like this can have a big difference on your finances. Investing in stocks will give you a lot of tax benefits, like paying less taxes after you sell a stock that you've owned for more than 1 year. A big advantage because now these assets will be taxed like long-term capital gains. Another way that you can save money and lower your tax bill is by investing in retirement accounts like Roth IRAs and 401ks. These accounts can significantly lower your tax bill by allowing you to delay paying taxes on your investment gains until you are retired. Now let me ask you something, between non-dividend stocks and dividend-paying stocks, which one do you think is less risky overall? If you pick the second option, you're right, because we all know most of dividend-paying stocks include the blue chip stocks. To put it in simpler terms, blue chip stocks are well-established companies that have a great balance sheet and a solid business model. Think about the most successful companies in the world like Microsoft, Apple, and so forth. Investing in them is a safer option for those people that want to try to minimize the overall risk of their portfolio. Companies that pay out dividends tend to be more disciplined in their capital allocation decisions. The way they manage their cash is essential for the success and growth of the company. Think about it for 1 second. When a company pays off the dividend on a consistent basis for a long time, that means only one thing: that company is in good financial health and they have confidence in their future prospects. And finally, investing in stocks that pay out dividends can lead to significantly more long-term gains through the power of compounding. When an investor chooses to reinvest their dividend payments, they're basically dripping. To put it in simpler terms, they choose the dividend reinvestment plan. These plans are typically commission-free and they offer a really good discount for the share price. This graph illustrates perfectly the power of compounding and what a big difference it can make in the amount of money that you can gain. With their good income potential, long-term growth, tax benefits, low risk, and the power of compounding, dividend-paying stocks are a valuable addition to any investment portfolio. Remember, it's just finding that little sweet spot between risk and reward, and dividend-paying stocks, for me personally, are the golden ticket that I was looking for. So there you have it, the top 5 reasons why you should be investing in dividend-paying stocks. Keep in mind that investing of any kind has its own risks, and you always have to do your own research and consult a financial advisor before making any type of investment. By carefully considering the pros and cons of different investment options and diversifying your portfolio, you will greatly increase the chances of reaching your financial goals. Thank you guys for watching. If you have any questions or comments, feel free to leave them in the comment section below. Also, if you found this video helpful in any shape or form, please give it a like, or why not subscribe to see what's coming next, and I'll be seeing you in the next video. Peace!